Trump, a couple days ago, issued an executive order to increase nuclear infrastructure and production considerably. Right? Considerably in the U.S. So this includes increasing the U.S. annual uranium requirements from 47 million pounds to 190 pounds. So it's a 4x increase. We import most of our uranium. If you're not familiar with the uranium industry, I covered for a very long time. You know, I brought in like top CEOs from major companies. I brought in the former Defense Secretary of Defense, Spencer Abraham, Secretary of Energy.
Not Defense
No, Secretary
Secretary.
of Energy. Sorry, but it's coming in defense now with nuclear and everything. We're going to get to that in a second. But Spencer Abraham I had in this podcast, just, you know, great contacts in this industry, just to see the supply and demand imbalance. We've watched uranium stocks go in the past since COVID, and prices have gone up from the 20s a few years before COVID into well over 100. I think it was like 107, 110 maybe. Then pull back considerably. We had a 5 handle, 58, 59. Now we're back 70, 71, 72. And I'm going to tell you, I mean, this is amazing news because the U.S. used to be one of the largest providers of uranium. The oil companies used to produce a shitload of uranium. And then, you know, 3 Mile Island, a lot of this stuff happened. They said, okay, we're not going to do it, but it's okay for everyone else to produce it. Because if anything happens, we're glad you kill other people in other countries, right? Global warming. Like, you know, you want to cut emissions here, even though we besides 12% of carbon emissions, but we'll buy all the products from China, right? And all of the EVs and all the batteries and stuff like that, and critical metals and rare earth metals and stuff like that, which, you know, destroy the environment. It's okay if you do it in another country, right? But, you know, just besides the point. When it comes to uranium, we're in dire need of power. And this is due to AI and hyperscaler demand. So, you know, uranium stocks have been soaring. They've been soaring over the past month on this news because they've gotten annihilated before that. It was amazing. Everybody, the bull market's intact, and you throw in AI, and all of a sudden, you know, uranium prices came down a ton, and a lot of these names got hit. But if you're looking at uranium stocks, a global uranium ETF, Daniel, is URA. It surged from $10 to $30 from 2021 to 2024. It's a major move. This is an ETF of all these companies. Some of them surged even more. It pulled back 50%, and this was just in April at 20. And now it's at 33, which is an 11-year high. Amazing, considering you would think that uranium prices are a lot higher. They're still more than 30% off their highs. I think it's $72, $73 a pound right now. But now you're seeing this. You have Cameco's at an all-time high. You have Denison, NextGen, UEC up about 25% the past week or so. With that said, UEC, Denison, NextGen are still down 20, 25% from their highs, probably giving you an opportunity if you want to buy them. I think that this is incredibly healthy. You see these bull markets. We just saw with AI, this massive bull market, then this huge retracement, and then you get back to that bull market again. Same thing with nuclear. You have a good regulatory environment, a good administration that's behind this, and I think you're going to see much more production. You're going to see, you know, more supply come off the market, massive demand. I think it's a good time to buy these names. I think they're finally going to take off. We've been in them for a while. You know, really good news and good for them because we have a lot of diehards in uranium. If you go on Twitter and see these people, I mean, they're diehards. They have like 50, 60, 70,000 followers. Some of these guys, that's all they do is talk about uranium. It's been a real shit show for, I would say, at least 9 months to a year. And a lot of guys are like, I'm done with this. I can't take it anymore. And that's usually the capitulation. And now you're seeing a lot of these companies go higher. It happens all the time. I'm not making fun of you. It's happened to me too. Whenever I'm like, I'm done with this effing stock. I can't take it anymore. I'm gone. That's it. I'm done. That's usually the sign to me to take a step back, and that's usually the bottom. So you've seen it uranium. I still think there's a lot more upside left in this industry.
I think that's great news. Again, it's not legislation, but it's working towards that. I definitely think that these tailwinds are going to be huge. You're right to look at this buying back as a pulling opportunity. If you believe in AI, you have to believe in power generation. And I'll go to one of the most hated guys, but smart, Frank. Elon Musk warned in one of his interviews, looking next year, a year from now, essentially, you could start to see situations where you're not generating the power needed. And this is even over my head when you try to, I mean, it's not, but just think about this for a moment. Like when you think about replacing anything, which is a lie and a farce, so don't worry about it. Frank, there's a newer aluminum smelting operation in Oklahoma. However much it produces, just listen to this. The concept is that facility uses more power to make its products in aluminum than Boston, the city of Boston does. Okay? The demand for power is going to be off the charts for the next considerable years if you believe in the AI trend. If Elon Musk is half right, Frank, and you get serious headlines going, hey, do you really think we can generate X amount of power that we need? And you think some stocks are expensive now in this trend? Do you agree or disagree, Frank? We get a headline that says, hey, power might be, I think prices skyrocket.
Yeah.
Skyrocket. I hope that doesn't happen. I'm simply saying that optionality is for higher, not lower in this trend. So yeah, this is a no-brainer. Buy on any pullbacks if you stick with the names that, Frank just mentioned and a handful that we've talked about on a considerable basis, because keep it simple. Power is the most important thing.
You mentioned a couple of stocks, but Constellation, SMR,
yeah, that's the other one. Yeah.
Gale,
CEV.
You talked about GE Verona a lot. The 52-week low on GE Verona is 150, and it's trading at its all-time high today, which is 475. Okay, so this stock's that are working. Even though the market's flat on the year, it's amazing when you see the names that are working and the names that have pricing power, the names that aren't affected as much on tariffs. It's not a lot of them, but you've seen the Netflix take off, you've seen the Palantirs take off, the CoreWeaves take off. These dramatic moves where I don't know if it's algos and money forcing into these, because that pool has shrunk as interest rates have gone higher, right? Because you had this massive growth and everyone's growing. Let's get into the banks. Banks are really great right now. And then you had infrastructure stocks at one point, but then you have tariffs. And now you're seeing there's a select few companies. I think that it's shrunk by 1/3, where you have all the hyperscalers going up. Not all of them are going up now, right? So we saw Tesla pull back tremendously, right? Those were part of that group maybe a year and a half, 2 years ago, where all of them are going higher and going to new highs. Now you're seeing the select companies that are getting it done, that continue to see contracts, continue to see massive revenue growth. The premium that they're getting is much higher than the normal premium. So maybe they trade at 30 times forward earnings. Now they're going to be trading at 40 times forward earnings. That may seem like a lot, but when you have a smaller pool of companies that are getting it right, that are growing fast in the overall market, that's where you're going to see money pour in, because eventually a lot of these companies fill into their valuations, just like the Microsofts did, just like the Apples did, right? These are companies that are trading at almost all those companies that are 20, 30 years old. At one time, they were trading at 100 times forward earnings, and nobody touched them back then, and they're up 30, 50, 100x, right? So because you're like, holy shit, they're so expensive. Their PE is 100 when you're not looking at their total addressable market. But a lot of these names are starting to see more money flow into them. One name I would say be careful with is Oklo. So Oklo is a company that was $5 9 months ago, and it's 55. So this was a SPAC in 2021 led by Sam Altman, and the company builds SMRs, small modular reactors. I think this is a complete pipe dream of this happening. I really do. And I'm going to tell you why. And listen, Sam Altman, Daniel and I had an interesting conversation on Sam Altman yesterday when we went out to dinner. So my publisher Veronica's here, so we all went out to grab a bite and a couple drinks last night. Sam Altman, a guy that could raise an amazing amount of money, who's absolutely brilliant, but you don't have a lot of people that trust him. And when I see that, it makes me worried. When you have a lot of people leaving him and saying, basically wanting him to get fired from CEO of OpenAI because they didn't trust him because he lied to them. You're lying to board members. How do you lie to board members? It's very easy. Those are people that you should have to trust the most, since they're involved in your $300 billion company. That's the worth of that company. But he could raise a shitload of money, and it's great. And I get it's a good name on this. SMRs, guys, to me is just a pipe dream. This is a company, when they first did the SPAC, I think it was worth $500 million. The valuation's insane. I'll get over that in a second. They're building their first plant, which they said in 2021, and when it went public, they said it's going to be done by 2026, 2027. Okay, now it's 2028. It's probably going to be done in 2029. It's insane because the company has a valuation of $8 billion. That's their market cap, $8 billion. Okay, it's not going to generate revenue, not earnings, revenue. They're not going to generate revenue until 2028. Think about what could happen from now until 2028. Whether it's interest rates, whether it's, you're worried about the dollar, a market crash, a recession, anything pushes this stock 75% lower with the risks that you have to take on. Will it go higher in the short term? Of course it will. Altman's there, it's going to go a little bit high. Just be careful, because if you could buy long dated puts, I think this thing is tremendously overvalued. And it's not just because it's not going to generate revenue. You could generate revenue. We saw that with LNG facilities. They didn't generate revenue. What was it? Shinier Energy. And then once they got up and going, you saw the valuation, right? And it was a volatile stock, but you said, okay, here it is. They're going to generate money. We're exporting. Those were importing LNG at one time. Then they're exporting because of fracking. And China exports LNG, which, they can export for other countries for 3x to 4x more than what we're producing, what we're, taking out of ground for. So this is technology that is unproven. And when I say unproven, it's unproven because no one has come closer, even not even just a smidget have been able to scale this. Also, forget the regulatory hurdles, because getting these approved in the U.S. require local, state, and federal, which you're going to need, which is almost impossible because politics is really tough. So right now, if you're looking at AI workloads, and Dan, I'm going to break down some of this stuff for you, right? Because I know you want to say some stuff about Sam Altman, your favorite guy in the world.
I don't.
But AI workloads, okay? Our data center capacity right now is 44 gigawatts for AI workloads. That's today. By 2030, we're going to need to increase this by 3.5 times to over 150. Okay, this is several consulting firms. This is just based on demand that you're seeing right now. Some people think you're going to have to increase it 5x, but 3x if we're on the pace that we're at right now. It's over 150 gigs. Remember that, gigawatts. SMRs are going to produce probably around 200 megawatts of power. Now, some say they can be 350 or it could be 400, but they also say it could be 20 to 50 megawatts. So let's use 200 megawatts as, higher than the average, 200 megawatts of power. So 5 of these equal 1 gigawatt, which we need 156 over the next 5 years, which this technology won't be available in the next 5 years. It's not going to be 2028, trust me. 156 gigawatts of added capacity. That amounts to, you're going to have to produce 780 of these SMRs to just cover that, 780. So maybe they take up whatever, 5%. It's just putting the numbers in perspective of how much energy we need. And even if you get this approved, and even if you're able to scale this, the fact that they don't produce a ton of megawatts, and they're not even going to be able to produce, gigs from these systems, there's only 3 in the world today of these SMRs. And 2 are in China and 1 is in Russia. And if you notice those places, you have one guy that makes the decisions there. They say, okay, do it or don't do it. And no one says shit, or you get thrown in jail, you get your head chopped off or whatever, right? Here, you go through a massive process. And it's not just going through like the House of Representatives or getting bills passed and getting the executive and signing off and shit like that. You have to go through the local as well. And these, you have a lot of, again, these judges are coming out even to Trump orders and saying, no, we're reversing these orders. And it's hard to get it approved through that whole process. If you have one of these things that leak or whatever, this is brand new technology. Holy shit. So good luck with that name if you own it. If you're going to trade it, you could trade it. It's probably going to go higher, 55. Maybe it goes to 70 or 75. But I'm telling you, it's a company that could easily lose 75, 80% of its value over the next 2 years because you have no news coming in. This is SpaceX. We're all going to space. It's still generating no revenue. Nobody's going to space. Okay, so you're going to run out of money eventually, and they have a lot of money. If I was them, I'd raise $1 billion right now at this level. You're an idiot if you don't raise another $1 billion. You probably have a $200-300 million in cash. Raise $1 billion right now. Take the stock price down 15-20%. Who cares? Now you're good for another 2-3 years. That's fine, but do it now with your stock price here, because that's one of the names where I'm like, holy shit. I mean, that's worse than next gen. Next gen, same thing. Great deposit, high grade, expected to produce already. It's probably not going to produce for another 3 years from now. It's just when you see this trait, you bring in so many risks over time, over the next 2-3 years of what could happen on the macro level that could really crush these stocks that aren't going to generate any revenue. Not profits, any revenue. Just be very careful with that one.
According to Capital IQ, how do you say that? Is it Oklo or Oklo?
I think it's Oklo. It might be. I'm not too sure.
They have 201 million in cash on the books, according to Capital IQ. So yeah, they had to do a big raise lately. So
how much in cash?
201 million.
Yeah, 201 million. Yeah, and plus, listen, when you do a SPAC, you're getting a ton of money in, right? You're basically saying, here, retail investors, give us all your money, and we're going to annihilate you. You could buy the stock at 10, and we're going to annihilate you. This is one that went down to 5, so annihilated him for a long time, and now it's going back up. I don't know if retail investors held on through all this, but the average SPAC, I think, is down 95%. That came out. We're talking about, hundreds and hundreds of these things, all over 200 of them that came out. They were designed to wreck retail investors and to make a fortune for the insiders who bought these things at $1, $2, $3, and all these pipe deals. And then they sell them to 10 to retail investors. And then, these guys cashed out and had warrants that they didn't have to disclose. And the SEC is like, well, we hate crypto. We're going to go after crypto. Yet, you have it right in front of Wall Street actually destroying investors and fucking them. Sorry, I can't say that any clearer, but it's ridiculous when we have a regulatory authority that's that's what they say. Hey, we don't want you to invest in crypto because we're looking out for the investor. Bullshit. You're getting paid lobbying dollars to basically close down the firms who you don't agree with instead of really focusing on helping the individual investors, because it's very difficult. I'm a professional. I know how to analyze these things. I see who's full of shit and who's garbage. And most of these were garbage. That's why all the institutions rushed in and said, oh my God, this is the biggest money grab we could see. Look at this in 2021, 2022, right? And then before the whole thing, the shit hit the fan, a lot of these things are going out of business. This is one, be careful. I mean, look, it's a good idea, but SMRs, everyone I talk to, this is something that's probably not going to exist before 2030. Especially on scale. And this company's trading as if they're producing 100 of these a year right now at an $8 billion valuation, which is pretty insane. So just be careful.
It's one thing not to see earnings for a while. That is awesome about revenue.
Isn't it crazy?
You got to give them credit for that. But hey, it's an idea. It just shows you when people tell you, oh, that can't happen or this can't continue. Just listen, you're not paying attention to markets if you don't think things can be crazy. So just don't let that make you crazy. Yeah. It's a hell of a story. If you're in it, enjoy.
Yeah, so and just out too, just at the wires too, when you're looking at oil, because we got a little time left here. So OPEC nations said they agreed to reaffirm the level of overall crude oil production. So they'll be assessing further production steps for July, output over the weekend and stuff like that. So we'll see, through OPEC and Yeah, so OPEC is cutting roughly 2 million barrels a day until the end of 2026.
Oh, they're going to cut.
That's
Good.
under
They were
the
just about
formal
to go
under
raise
the
again.
formal policy, under the formal policy. So,
You know, Frank, this is like trusting a drug dealer. If you can't trust a cartel, who can you trust to tell you what they're going to do next?
I mean, how do you get to trust a cartel? You go to and sign deals with our AI companies. Which
You know,
is pretty
something
cool.
has to be there because they recently raised production, and you could argue, well, there was no reason to do that other than being favorable for Trump. There's some deal going on back there. It's got to be on the Russian side and sanctions, and of course, there's Iran. There's a mess there, but oil is, yeah, that's fun to opine on.
Yeah, we're at $61, $62. I just think oil right now, I think is a steal. Some of these companies are just positioned well. It's amazing how you've seen their stock price come down. They're raising their dividends because their balance sheets are so strong. You know, we covered a new recommendation. They're producing at $38 a barrel. They're hedged at like $68 a barrel for 2025 full production, and even at $64 a barrel through the next couple of years, which is good. That's guaranteed cash flow coming in for a company that went from $9 to $3 that we just recommend, like under $4. So, you know, we just recommend that for Curzio Venture Opportunities, a small name that I just went to go visit. But there's a lot of good deals within the oil patch. If you see $65, $70 a barrel, which I think you're going to see, I think a lot of the negatives are priced in right now, especially if interest rates come down, especially with all the stimulus coming in from China. It's got to stimulate a little bit. I know it hasn't worked yet, but we'll see. I just think there's more positives and negatives for oil at this price, right? Not at 90, not at 80, but at 60. I mean, you know, you're looking at, I don't know if you see a lot of downside to really good names that have great balance sheets, that are producing well, that cut costs, that could just, you know, it used to be $12 million to do wells. The company we just recommended, it's $5 million. They cut it down to, they just, you know, they're using the right service providers and everything, just the drillers, the capacity, the technology. It's unbelievable. Unbelievable being on this site and being on a rig that's actually drilling with these pipes going in and then going underneath and going 2 miles away, and the sound that you hear, you know, how to wear all the right gear and the safety gear and stuff like that. It's incredible to be on these sites and see what these guys are capable of doing. Holy shit. It really is amazing. But at $60, I think there's a lot of upside, and especially in small caps within the oil space, that you could do pretty well.